All right, what's up, guys? Welcome, everyone. Today we have another exciting episode with Dirk from Prime XPT Academy. We are going to talk about the FOMC, and Dirk has some really interesting shots here on to show you guys on the different FOMCs going back. In the first video we recorded, or not the first one, but in the beginning of this series, he showed a very interesting chart on the S&P 500 and how it basically made new lows a certain time after the FOMC announcement. So if that pattern is going to follow out, we might very well see some bearish price action, in the next couple of days or a couple of weeks even. So yeah, that's something we're going to look at. And yes, of course, the today's video is sponsored by Prime XPT, which is the exchange we both use when trading crypto and Forex indices, commodities, and all that fun stuff. You can use the link in the description below and type in the code BURBNEST to get up to 7,500 USD deposits. So basically, they're giving you free margin, free leverage. So very, very good to have. All right, Dirk, that's the intro. How are you doing?
Good. Good to be here again. And despite all the challenges the market has at the moment for us traders. Yeah, and I think you said it pretty well. FOMC was like one of the topics very much in the beginning, if I remember correctly, that we were talking about there. And back then I was more on the bearish, on the short side for the stock markets, and to a certain extent also for Bitcoin, although I didn't trade Bitcoin short. I rarely do, at least longer term. And yeah, maybe we can share my screen here, then I can show a little bit what, might be on the horizon for the next weeks in terms of stock market. All right. So yeah, this is basically the chart we were looking at in one of those first episodes there. I must have been around in the beginning of April. And back then I said one thing I noticed was whenever those FOMC minutes are released, and so they are due today again, what we usually see a couple of days or weeks after this are actually new lows in the stock market. So ever since November 2021, that has happened. I think the last drop we saw after the FOMC meeting in April 2024 was the most severe we've seen so far. And as you can see with this little circle I painted down here, this was actually my target zone. So I said back then that I wouldn't be surprised if we land somewhere around 4,000 points. Actually, I closed all my positioning there when we entered this bubble, so on this candle here, and I already switched a little bit to the long. I didn't really expect that we would go much lower than 4,000 points, but yeah, I mean, the S&P 500 broke down there. And the question now, of course, is with the meeting today, what is going to happen after this? If the pattern continues, we might be in really for a wild ride, in my opinion. So that would mean potentially that we could see a drop to 3,500 to 3,300 in the S&P 500. And as always, this also would not be good news for the likes of Bitcoin. However, I'm not so super sure that this pattern is really going to play out this time again, because in my opinion, by now the market should have priced in pretty much already, what the Federal Reserve Bank has in stock for us. Meaning everybody knows by now that the Fed wants to taper. So that they want to stop and wind down this bond buyback program that basically they have been doing since pretty much 2008 to reduce their balance sheet. And everybody knows that they want to respond aggressively to the high inflation, which nobody would be surprised if in a couple of weeks down the road we see a rate hike of 0.5 or maybe even 0.75%. So this is pretty much priced in the market, in my opinion. So maybe we are going to see really this time a deviation from that pattern. And I think that also would make sense if I look at the whole sentiment of risk on assets. So stocks and especially also cryptocurrencies, we are in the worst sentiment that I've seen really, I think, pretty much since 2008, to be honest. Like everybody's bearish, everybody's expecting falling prices. everybody, I mean, you just have to enter Twitter where everybody is like, oh my God, the whole system is going to crash. We are doomed. Buy gold or do whatever to secure the money you still have. But if I look here, for example, at Bitcoin, what we can see is we had 8 weeks in a row now with red candles, so with lower prices. Actually, the last candle here is candle number 9. I cannot even remember if we had something like this before already. So we are really, really bound to have at least a little bit of a reaction to the upside again. When I say a little bit, maybe something to 35 or 37,500 US dollar. The same, of course, if I have, is that a weekly chart? No, let me switch to the weekly chart here in the S&P 500. You can see it's really in sync to what we are seeing in cryptocurrencies at the moment. Also here, 8 weeks in a row of falling prices. And now, at least that's how it looks at the moment. We might see, if the market really stays at this level until Friday evening, we might see a green candle. And if you want to look for a pattern like this, when it happened the last time, 8 red weeks in a row, you have to go very, very far back. And if I remember correctly, don't know if I can zoom, but if I can scroll that far here, it was right during the dot-com bubble in 2001 that we had 8 red weeks in a row. So, that was back when I started my career as a stockbroker, actually. I'm very sure, like 21 years ago, many of our viewers were not even born, maybe. So it's really, you have to go very, very, very much to zones of your chart where you haven't been. And I'm going to be really, really nosy and will try to read a little bit, between the lines tonight. And if there really is some kind of surprise aspect still that the FOMC has in stock for us, because I really don't know, and I've thought long and hard about this, how they are going to surprise us, or if they are able to surprise us at all. And maybe one more thing here, and then I'm going to stop my monologue, promise. Talk about cryptocurrencies. There's one indicator I like very much, which I like to use for kind of time my long-term investments in Bitcoin. That is the so-called Bitcoin realized price, which basically is the average price where all Bitcoins currently in circulation were bought. And this is at the moment between 24 and 25,000 US dollars. What you can see here, if we go all the way back to 2011, whenever the price of Bitcoin, so the colored dots here in this case, dipped below this purple line, the realized price, those were always pretty good zones to buy again. So you were able to almost catch the bottom. The last time that happened, by the way, was March 2020. So when COVID hit us for the first time, and Bitcoin dipped below 5,000 US dollars. And imagine if you would have loaded up your bags back then, you still would be up by, what is that, like 550%, even with 8 red weeks in a row now in Bitcoin. So that's pretty amazing. I'm waiting actually for the price to go there so I can really, really buy a lot more than I already have.
Yeah, so very interesting insights as always. I really do respect your views here, and they're really thoughtful, right? And I like that. First of all, I just want to say that you said sentiment is like an all-time low, pretty much, and that's not it really is like that. But I think I'm one of those people. I'm definitely bearish.
It's hard not to be. I mean, completely understandable.
Yeah, but what I'm saying is, like, there's a difference between this. Like, if you look at Bitcoin, there's a difference between this bear market and the 2008 one, right?
Yeah.
Because in 2008, what happened was the bubble popped, right? But now it's not about a speculative asset bubble popping. It's about the whole world kind of turning into a possible recession, right? So I think like, yeah, I'm looking at the S&P 500. I'm gonna share my screen here, and I'm gonna show you, right? So I'm looking this for me. This is the S&P 500. I'm looking at the S&P 500. I'm looking at Nasdaq and the Dow Jones. They're all in a very, very clear downtrend, right? But what's interesting here is we're testing the upper limits of this channel while getting pretty close to FOMC, right? So what I like is the fact that the FOMC comes out at the same time as the US stock market is at a pretty decent invalidation area. Because what if, right? So I just got an alert. I'm actually in a short on Nasdaq and the Dow Jones here. So let me not get too distracted by the price action here. What I'm thinking is, this would be like super bullish, right? That would be really bullish, right? And just like you said, look at the weekly candles, and it's like, it's almost like this level is like just asking to get retested, right? But even with that, still in a downtrend. We're still in a downtrend. So assume we have the FOMC and the relationship that you're talking about, excuse me, with the FOMC and the S&P 500. If that doesn't hold, we might still see a move lower after S&P 500 testing that daily resistance, Bitcoin testing this resistance, right? So I'm thinking that there's people that are, because now everyone's bearish, right? The professionals are bearish, the economists are bearish, the traders are bearish, and the retail traders are also bearish. Everyone's just bearish, right? But the retail traders, they will be quite bullish when Bitcoin does this, and they're going to be quite bullish when S&P 500 does this, right? While I'm pretty sure the professionals like you and me, we're going to look at this and we're going to say, wait a minute, we're not out of the woods yet, right? We still have the macroeconomics looking kind of shaky, and we're still in a downtrend, right? And if this downtrend is going to continue, especially on, I'm going to get some water, sorry.
Go for it.
All right, so if this downtrend is going to continue on Bitcoin, right? You talked about Bitcoin realized price, and it's close to hitting that level, right?
Yes. I mean, what is close? It's like another like 15, 16, 17%, if I'm not mistaken, which is a lot, obviously, but we're talking about Bitcoin, so it's actually not that much.
Let's say 15, 20, right? So let's say where would, oh, God damn it, my throat is really bad. So 15 to 20% drop, where would that take us? Well, right inside the reload zone right here, right? And what would happen if Bitcoin enters the reload zone? Something I've been talking about is the net unrealized profit and loss for Bitcoin. What would happen if Bitcoin probably drops 20% more is we will most likely enter capitulation phase of the NUPL, which is the best possible buying opportunity according to this chart. And another chart and another metric I like to look at is the MVRVC score, which is the maximum, like the best possible buying opportunity is down in the green area. You can see here the bottom of the bear market here, also the COVID crash, and this is the history of Bitcoin, right? Just absolutely beautiful. This was the recent top, right? So I do think that we have more downside coming.
Yeah, we can. I mean, and just because we dropped, in your case here, into this green zone or to the realized price, doesn't mean that we stop immediately there. So it's not going to be probably in a way we're crashing down to 24,000 and then we have a V-shaped recovery again to 35 or 40,000. This is not going to be. The price can remain there very long, actually. My at the moment, my favorite hypothesis for the next 6 months until November is maybe that we are inbound actually for a boring market. We haven't had something like this in a very long time. Like everything is priced in already, and stock markets and cryptocurrencies go into an extended sideways range. For Bitcoin, let's say something between 25 and 35,000 US dollars. And like, you know, when you'll have all those memes again with a guy poking Bitcoin with a stick, come on, do something. And I think this is something nobody's expecting. Everybody's kind of expecting volatility. But, you know, maybe we are inbound for a phase where we actually do not have a lot of volatility and the market kind of reloads itself. But then again, like you just said, Lip, just because if the immediate reaction after the FOMC meeting, and immediate action, I mean the next couple of days, is that we maybe see stronger markets again. And somehow the S&P 500, in my opinion, is kind of hinting in this direction. If I look at the closing prices of the last 2 days, for example, if I'm not mistaken, we were always closing on a high note. So the last half hour of the trading session, the S&P 500 always trended higher, which normally is an indication that somebody is positioning themselves there to a positive outcome of the FOMC meeting. Now, I could be totally wrong on that, so please do not go ahead and trade based on this analysis. But so actually quite a possibility what you were talking about. We see a tick up maybe a couple of days, then suddenly the sentiment, especially for cryptos, turns positive again. I mean, it can turn positive in a matter of 24 hours suddenly. We've seen that all. And then all the retail traders step into that bull trap again, thinking, oh, we're going to 40,000 now or 45,000.
Yeah, because I think a lot of people are looking at Bitcoin from looking at, like, it's not a perfect range. I'm just doing something here. Yeah, something like that. So imagine, you're looking at this range and you're thinking, all right, I'm going to stop Bitcoin. I'm just going to stop buying Bitcoin as soon as it breaks this level to the upside. But I think, the area between like 34 and 35, I do suspect that it's going to act as like really strong resistance. And this kind of also is a good segue into talking about how one could prepare for the FOMC, because the FOMC is basically the federal like the Federal Reserve, the Central Bank of America, coming out and talking about their like economic prediction, right? And if they're gonna, what they're gonna do with hiking rates and stuff like that. And that is always going to be a potential market moving events, and it's not only going to move the markets trading against USD. It's going to potentially move all the markets in the world, because it's the biggest player, biggest economy in the world, right? So how would you prepare for that? Well, my way of preparing for the FOMC is not trading around the FOMC.
Yes.
If I am in a position when the FOMC is coming up, I secure that position, and I'm not going to be entering that position again or entering a new position at least 1 hour or maybe even 2 hours after FOMC, because we've seen such extreme volatility after the FOMC, and it can actually go on for quite some time.
Yes. Yeah, you shouldn't be doing, I mean, especially if maybe a lot of viewers out there are more, trading on the short time frame. So I'm talking here maybe about 30-minute charts, 1 hour charts. Maybe you usually hold on to your positions just for a couple of hours, or maybe a day, or maybe even shorter than this. If you're scalping 5-minute charts or something like this, you might want to sit this one out, because I know a lot of people are interested in this news trading strategy type of thing, but it's, in my opinion, really a gamble. And you never know how the market is going to react. Even if, like, let's say it's like something positive for the market, we could first see a downswing because there's some big hedge fund that needs to get rid of positioning, moving the market lower because they were on the wrong side. Maybe you never know that. So yeah, definitely maybe stay on the sidelines there for a couple of hours until things normalize again. Especially important if you have a more technical setup, because your indicators might go wild for a while and show you confusing things. And if you are more of a fundamental trader, to some extent I am, and of course this is going to be the signal probably for you, whether you think the market is going longer term, like in a matter of the next weeks, higher or lower.
Yeah, I think also I want to show an example of how because I did take a short on Nasdaq last Wednesday. So it's
Nice.
this trade right here, and yesterday because I secured this position and took some profit, and yesterday I wanted to short Dow Jones as well because I liked how it looked, right? So but it immediately started running against me. I woke up this morning and I started thinking, right, so I need to make a plan now on how I'm going to secure this position prior to the FOMC. So I took the decision because it was trading up here. So I took the position and said, you know what, I'm not going to exit here because it's so close to my stop loss. So I might just let it go and take my stop loss, so I'm not going to exit. I'm going to wait for price to come back to entry, right?
Yeah.
Because looking at the 1 hour, it kind of looks like it wants to test this level. So I just want to get out at entry, and this one is secured. So I'm good with that. Now, before this video, I looked at the Dow Jones chart, and I'm saying, it's actually hitting that area right now, and it looks like if it's going to bounce, probably going to, like, the probability of price bouncing here is quite high. So I thought about maybe exiting right away, but I remember like writing in my journal quite often that it's always better to put in a stop loss very close to price than to exit at market, right? Because a lot of times when I do exit a market, it just continues to go.
Yeah.
Now this one is probably going to get stopped out, right? But there's a small possibility that it's going to continue lower. So I want to stay in the trend. So instead of just taking this decision to exit that market, you might as well find a low time frame level and use your stop loss there, but it's going to be very close to price. Anyway, the plan here was to secure these two positions prior to the FOMC, because most likely, if there's volatility during the FOMC, it might look something like this, right?
Yeah.
And you don't want to be in there. It might even look like this, and this is quite normal. Takes out the stops, move down, you short again, and then it continues higher.
Yeah.
It happens so often when you have these news events, and that's also why I don't like trading the news, because a lot of people they see, for example, let's say Bitcoin trading in a range. So what they're going to do is that they're going to put in a buy stop here and a sell stop here, and they're going to say, whatever direction price is going, I'm going to make money. All right, so like it pumps, it dumps, and then it goes back. it happens so often, right?
Yeah.
Just run stop to the both side, and then so that's why you want to wait for this. You want to wait for this to get over with before you enter a position.
Yeah, I mean, you can do that actually with this buy stop and sell stop, but I also wouldn't recommend doing this in this environment where we have economic news coming out. Under normal circumstances, maybe not as close as the range is at the moment, but if you really see like volatility squeeze, you can, for example, if you use Bollinger Bands and you see the Bollinger Bands like contracting very close to each other on a long time frame, this is you have to watch this on a daily time frame. Then buy stop and sell stops are good methods of getting into trades. Probably I would prefer trading this with options, by the way, but that's a whole different story. And but do not do this in this environment, especially if it's an FOMC minutes release. If it's just a normal economic release, like I don't know, like labor data or whatever. Okay, why not? But this is, you have to imagine on the institutional side, every fund manager, every pension fund manager, those are the guys who are investing your pension and are responsible to make sure that you still have a pension later on when you want to stop working. So they have to invest very conservatively. They are all going to sit there tonight and listen very, very closely to what they are going to say there during the minutes. And then they are going to reposition themselves accordingly. And this is such a force of money, such a wall of money that is going to restructure itself that, it would be like throwing a plastic ball into a tsunami, the plastic ball being your trading position.
Yeah, absolutely. It's and also I remember reading a book, interview with a guy who developed an algo that was trading the news, right? And he managed to, so the algo kind of listened to the news, right? Whenever there was a news release in text, it read the news in a millisecond, and it listened to the press conferences that the Fed has, and they could listen to the tone and the voice and that sort of stuff, and trade based on what that AI or algorithm thought might happen, right? So when I read that, I decided that I'm not gonna try to trade the news ever again, because there's people out there with unlimited amount of money creating AI systems that are gonna do such like you can't compete with that, right? Because it happens on the level of execution these guys have is insane. Like it happens in a millisecond. You're not going to be able to even enter in your orders before it's too late if there's like a huge move with news. Now, I know that a lot of people can obviously do this successfully, trade the news, but it's becoming increasingly difficult day by day.
It
I
is.
believe.
Like I know a guy, for example, who up to a couple of years ago was specializing in latency. And so what he would do is there would be an economic news event, and he would suck this out of the fastest source, so to say. Like he could see, is like the Fed, for example, fast in publishing this, or is Bloomberg the fastest, and so on and so forth, or Reuters maybe. And then he would make sure that he has a trading server as physically as close to the exchange server as possible. So we are really talking about almost nanoseconds that he wanted to be faster, because he wanted to be able to really within nanoseconds react with an algorithm to this news event and enter the market before everybody else was entering this. He made millions of US dollars with that, really. But after a couple of years, he said, I'm not able to do this anymore. We are now in a realm where we are restricted actually by the speed of light. Which is insane. I mean, this is the type of people you are competing with out there. Imagine.
Yeah,
so.
yeah. It's they're so smart. They're so smart. It's just they're geniuses, really. So what I do is I leave that to professionals. I try to just I'm just trading better when there's like clear runway when it comes to news and events. It just that's the way I want to trade. I want to make sure that there's no not too many obstacles in the way when I enter a position, right? So I want to enter a position. I want to make sure that there's no major news coming out in the next hours or so. Could be the next day, but ultimately, I'd like to have. If let's say I enter on Monday, I don't want no major news event until like Wednesday, right?
Yeah.
Because it might be the case that I enter on Monday, wake up on Tuesday, and I'm in a loss, and I got news coming in 3 hours, right? So it's hard to kind of secure the positions. But so I do think that, looking at Bitcoin right here, we have the FOMC coming up today. So the best, I think the best advice we could give people today is not to trade. Honestly, I think well, if you're scalping, sure, go ahead and just stop scalping when it's like 30 minutes before the event. But most people are not scalping, so most people are swing trading or looking for buying positions and that kind of stuff. It's much better to wait for the news event. So that's going to be at today at when is it? It's today at 20, so 8 tonight UTC +2. So it's going to be at 6 p.m. UTC.
Yeah.
And I would just wait till after that event and see what price action is doing about 30 minutes or an hour after the event, and then perhaps trade whatever's happening.
And maybe also, as a pay attention also to what the stock market is then going to do in the last half hour of trading, because it's probably going to give an indication what we are going to see the next days. So are we maybe higher after the release, and in the last half hour you see selling action and the stock market closes on the lowest point of the day? That would, for example, be an indication that we are going to continue to trend lower. Vice versa, if the stock market trends higher in the last 30 minutes of trading and maybe even closes at the high point, that would be actually then something that would speak for a breakout out of this downwards channel you were just showing us here on your chart. But also this, like looking into the future of a couple of days, maybe a week or two down the road, could also very likely be a bull trap then.
Yeah. All right. So do you think... so how do you think the market's going to react on the FOMC? We're at 30 minutes. So I'm thinking we're going to end this video shortly, but just give you your idea on where you think the market might be heading in after the news event. So
I don't think we're actually going to see so much reaction, because the market is already expecting the worst in terms of interest rate hikes and tapering, so reduction of the balance sheet.
Well, right?
Sorry?
Last FOMC was the same, right? We got what we expected, right?
Yeah, exactly. So it's probably going to play out then over the next couple of days, especially maybe because the players, the big players in Asia and Europe might be out of office then already, and they are going to start reacting to this the next day. If you run a multi-billion US dollar hedge fund or pension fund, you are not going to just make decisions based on something that you just read and then change your whole position. That's a longer process, of course. That's why we see delayed reactions to that. But let's see. I hope the Fed is not going to surprise us in a bad way.
No, that would be quite bad. We already had a carnage, really bad.
Yeah, carnage, really.
All right, guys, that's it for today's video. Make sure to give Dirk a follow. You should follow him on Twitter. It's a Prime XPT Academy, and he also has his YouTube channel with a lot of good educational content for all of you. So hit that link in the description below and give him a follow. All right, guys, take care and see you guys in the next one.
All righty.
Bye.
Take care, everybody. Bye-bye.